Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront, and generate consistent returns year on year. So the first thing we want to do is open up any equities underlying in our brokerage platform, and we want to navigate to where we can see a list of expiration dates. And at this point in time, we simply want to see where we are in the current expiration cycles or in the current option cycle. And we also want to lock in an expiration date for our positions that we're going to mock up. So the expiration date that we're going to choose needs to be between 30 and 60 days out in time. And it also needs to be a monthly expiration, not a weekly or a quarterly. The only expiration date that fits that criteria right now is December 20th. So that's the one we're going to go with, December 20th, 34 days out in time. So we can take that information, come over to our watch list, and filter out anything that has earnings over the next 34 days. We don't want earnings to disturb our trade. We don't want volatility to increase. We don't want our deltas to get messed up. All of these things will have a negative effect on our P&L. And we also want to filter out any underlying that has a low liquidity rating level. So we'll then be left with a watch list that looks something like this. And I personally like to just order everything from high to low IVR because we want to sell premium when volatility is high and play the contraction back down to the mean. So at this point, what we want to do is simply go down the list and see what would look good in our portfolio. Just make sure that you're keeping all of your positions nice and diverse with respect to each other. And we want to see basically what would fit well. I'm assuming that you've got nothing in your portfolio, so we could just pick whatever we want for the purpose of this example. PLTR or Palantir is sticking out to me right now. I believe it has gone on a tear recently. Let's just have a look at the chart. As we can see, yeah, Palantir has gone on a lovely tear. If you go back over to our watch list, it's currently trading at just under $66. It's had it's got an IV rank of 60.2 and it's got an absolute IV level of 66.7. So some nice numbers, and let's see if we can mock up a position. So we already know December 20th is the expiration date we're going to choose. And at this point, we can simply mock up a position. The market is closed right now, so obviously not everything is loading in properly. It is a Saturday. However, this just goes to show we don't actually need all of the data, all of the information to mock up a position. Once we know that the underlying is liquid, we know that the options are liquid on that underlying. We know that we're not going to be paying high spreads. All we need is delta, really. And as we can see, delta's not even loading in properly, but that's fine because we use standard deviations. That's basically the deltas will always line up with the standard deviations, almost always. Not perfectly, but almost always. So as we can see here, these blue lines show us where our standard deviations are. So this blue line here is our one standard deviation. This is also one standard deviation. And we basically want to be selling contracts at around the one standard deviation mark, which typically lines up with something in between 15 and 20 deltas. As we can see here, the 80-85 strike is 16 and 22 deltas, lining up just at the one standard deviation mark. So if we were to go to, say, the 16 delta on the call side and then on the put side, we can just go with the, say, if we go just a little bit outside the standard deviation mark. Let's say if we go to, well, there's no bid there. So if we go to $50 here, the 50 strike, as we can see, we've essentially created a range for ourselves between 50 and 85. And we've got an 83% 83% chance of this trade working out for us if we hold till expiration. And we've got a 93% chance of hitting 50% of max profit at some point over the next 34 days. So very, very high probabilities. And this is also, we're doing this in the dark, basically. So on Monday morning, we would have a lot more information and we could fine tune this position. But as a baseline, just to show you an example of how powerful this technique is in your portfolio, i.e., selling premium, we'd get 7 points, we'd get over just under $8 of daily theta decay. This would increase every single day, provided that all else remains equal. We'd collect $157 up front, and our broker is going to require just over 1.6k in buying power. So we've got almost a 10% return on a naked position, which is really nice to see. And we've got some very, very high probabilities here that should work out in our favor. If we did want to reduce our buying power requirement, we can simply just buy another contract, say $5 wide on either side. And as you can see here now, we will collect less premium, but our buying power requirement has significantly been reduced because we no longer have an unlimited loss potential. If we just go back, we can see here now we have an unlimited loss potential. I would personally recommend sticking to the naked position on this. The numbers just look better on a naked position as opposed to a covered position, or you can simply just choose a different underlying. So how would you know how much buying power you need to allocate to each position? So we've created a position sizing template that's free for everyone to use and get a hold of. The way it works is you enter in the size of your portfolio at the top, and then below that you can enter in what the current VIX level is, and everything then will be automatically calculated for you. And all you need to do is stick to this outline and use it to form the backbone of your portfolio, and over the long term you will be absolutely fine. If you want to get a copy of this, link is in the description, and then click on the free position sizing template. If you want to learn in more detail, click on EDS Premium, get yourself signed up. Again, link will be in the description for that as well. And inside, you will have access to our portfolios that will allow you to see what positions we're placing, how we're managing risk, etc., all in real time. There's also a full course, so no prior knowledge is required. We will teach you everything that you need to know. It is also a private community, so if you get stuck for any reason, you can speak to myself directly, or you can speak with other like-minded individuals who are also inside. There's a 100% money back guarantee. So once you have studied our full course and followed our trades for at least 6 months, if at that point you aren't profitable, then we'll work with you for free until you are, or you can simply request a full refund. So it's completely risk-free on your part, and it is only £1 a month to join right now. The price will be increasing. However, once you're in, the price is locked in for you for life. So you are definitely rewarded for getting in early. And with that being said, I will see you guys on the inside.